Okay, evening everybody. Hope you're doing well. Hope you're doing good. As I just put in the chat, let's just get off to the right foot and just let me know straight away whether or not the sound's actually working and it's loud enough as well, because we seem to be getting that problem. And I did the stupidest thing possible yesterday. I decided to mess around with my audio settings. Good to see that it seems to be loud and clear. So I was messing around with my audio settings, changing the EQ, all of that kind of stuff, and I forgot to save the old ones. So I was like, bugger, if this doesn't work, we are in trouble. But hopefully we seem to be getting there, which is great to see. Hey there, Mo. I think the only knight here is probably yourself, but I'll take a knighthood if someone's handed it out. Stu and Chris, good to see you guys as well. It's just clocked over to 8 o'clock, so we will make a start. We've got quite a bit to discover. Well, it's going to be a discovery, certainly for me, tonight. We'll go over some news, a bit of bouncing around between the news. There's quite a bit to cover. There is no research token this evening, and the reason because of that is I'm actually going to talk about something that I was sort of quite into this week on Twitter, which kind of took a lot of my research time. Hopefully it'll be interesting for yourselves as well. And that's just the difference between derivative trading and spot trading, and how paper Bitcoin might, be suppressing or inflating the price depending on which time in the market cycle we're at. So I think that'll be an interesting thing to go through. Got a shed load of questions, which is great. So we'll run through all of those. We'll cover some price stuff, and then we'll have a look at just maybe revamping how we're going to do this. But I'll put it over to you guys and just sort of try and tweak a little bit, maybe over the next few weeks, just to try and bring a bit of freshness to it all. Without any further ado, though, let's just put up the live screen. And hey there, Richard. And then we'll get going. Oops, not that. Yep, it's on. Sorry, I'm all over the place. Perfect. Right, well, last week's Avenger call was 1 week too early, because I was talking about how we hover around 26k and we've not budged from it in the last 4 weeks. And lo and behold, like a magnet, that's exactly where we've ended up. So again, another failed rally, although it was sustained over about 7 or 8 days, sort of last couple of weeks. What we've seen in the last 7 days is that retracing back around to the 26,000 level. Now, when we talk about Bitcoin a little bit later on, I did last week quite a lot of detailed analysis on the price. So maybe just keep it a little bit higher frame in terms of where we are. But you're going to have a look at some EMA, some previous price levels, and some fibs. And actually, this 26 level is pretty strong. So, we just need to sort of like scale in where we think that's going. Doesn't mean it can't lose it, but we'll have a look at some of that. What I do want to have a talk about and start off with, that I think we just need to, because it's been on a hell of a rip, is the Dixie. Now, we don't often talk about this here, but, since mid-July, so for the last 2 months, this thing has not stopped going north. And, it broke that 100 level, and I'll be honest with you, I thought that was it. It's the beginning of the end, and we were going to see sort of some mini bull run in the stock markets, and the dollar was going to drop. But actually, it's been anything but that. And what we've really seen, if I drop it onto the weekly, we've seen like 7 or 8, let's count them, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 into our 11th week of solid green candles climbing up. And actually, when you look at it, we've also broken some pretty significant levels. So let's just throw a few on here. I mean, obviously we broke that peak, then we've gone and broken that peak, and now what we're really looking at for me, I'm going to draw it here. I mean, I would not put a fib on or anything like that, but I'm kind of looking at this level as real. That the level I was looking at? I think it was. I mean, it's on the weekly charts. So it's not as tidy. But that kind of like 107, just under 106.9, 107 kind of level is the next kind of level that we've really got now that we have cleared it. Now, you could argue we've still got, half a week left until this candle may potentially close. And so we could see a retracement from that. But given the strength that we've actually seen over the last few months, no one, that's not fair. You wouldn't, you'd forgive someone, should I say, for thinking that this is going to continue upwards. Now, we do have a lot of big events coming along this week. So Chairman Powell's going to speak. We've got the old standard ones, but we've got another big one, which I'm not really going to talk about. But we've got another situation on Saturday where the United States might actually run out of money. And so they need to decide what they're going to do. Now, we talked about this in May when that was going to happen in and around the beginning of June. And they didn't actually raise the debt ceiling. They just effectively suspended it back then. Since that time, they have printed a couple of trillion extra. So, you know, while no one was supposedly looking, they certainly have spent a hell of a lot more. And we've got another situation that comes Saturday, if they don't get a resolution of this, then when everybody wakes up on the Sunday, we could see that major disruption, etc., you know, across the US as all the government agencies actually stop working. And so, you know, that could also have a knock-on effect. Now, I'm not going to go into it. If you're interested in it, go and have a look at the last video we did in May. We went into every single time over the last about 20 years that they have raised the debt ceiling. Let's just say that this happens often. It normally comes down to the last minute because neither side wants to do it, and I'm sure there's some political sort of arm wrestling that's done, but it always seems to get increased. So I've got no doubt that an 11th hour solution will present itself, but it is effectively kicking the can down the road. We know this. You've been through the course. You'll know that yourself as well, which is why we all love crypto. Certainly why we all love Bitcoin. But it is interesting to see how well it's climbing up there. Hey there, Erjan. I hope you're doing well. So yeah, so that's kind of the levels that we're sort of, I'm certainly looking at there. But it is just interesting that you know, we had all the way through 2021, 2022, kind of recovered quite significantly for the majority of this year. And I thought as soon as we dipped below 100 and closed below it, that was it. We were going to see sort of the mid 90s, but actually it's complete reversal and off it goes. Can I speak a little bit louder, Reese? Right. Okay, guys, is it my microphone? Am I speaking too loud? Or, because everyone prior to you said it was okay. So now I don't know, but you were last time, you were the ear that actually were true and it wasn't loud enough. So, tell you what, let's just move this over here. Oops. Someone's put loud and clear, but what I'll do is I will just, here's my volumes up. Okay, I will put the microphone closer. I will speak loud. And then what I'll do in the recording is I'll just drop a few decibels so I don't deafen anyone. But I will try and speak up. Obviously, do let me know if it's any interference. I don't know why. I just seem to have problems with my sound. Okay, let's just close this one down. Ethereum, we'll go through that in a bit more. Ooh, what's happened here? We'll go through that in a bit more detail. And then we've got CAS as well, which I know everyone's going to want me to talk about. And I will go into this one a little bit later on. I said on the weekly, you know, we did breach that all-time high. We got slightly higher, but that was last week. We have rejected from that. There's a couple of chart patterns that we could be looking at here, whether that's a double top on the weekly, whether or not it's a head and shoulders when you look on the daily and the 4-hour charts, or if it's actually just catching its breath and we're going to see what we have seen. To be fair, let me open this one up. You know, previous occasion, pull back, climbs back up, pulls back, climbs back up. We've had the pullback. Maybe it is just going to climb back up. So we're kind of in a bit of a no man's land at the moment. One of the questions someone's asked me is where I am in my portfolio. What I will say at the moment is I sold all of my Casper. I didn't have much, you know that, guys. But I sold it just under 5 cents. I'm just waiting to see what correction happens. I didn't make much from it, but I made a little bit. It felt like the right time to sell. So I'm sat on my hands with this one at the moment. Okay, let's all jump into some of the news. And the first news article I'm going to talk about is a bit of an apology to go with it, because I wasted 15 minutes of your time last week. Some may argue I waste 2 hours of your time every week. But we talked last week about how people had announced that Bybit were going to leave, and then Bybit were very quick to say, and even Ben, the CEO, was very quick to say, no, guys, we're working with the FCA. We're not leaving the United States, the United Kingdom. We're going to try and work our way around that. And I tell you what, the second I've closed that live stream last week, then the announcement came out that actually they are suspending all services in the UK and effectively are leaving. And so I know a lot of people here have used Bybit. I've used Bybit since the day it came. Well, maybe not the day, but certainly within the first couple of weeks that it came out. I used it for derivatives trading, and all you could do back then was Bitcoin. But that was back in early 2018. So, you know, for the last 6 years or so, I've used this quite extensively, and it's been, you know, a decent website for me, or decent platform. But as we'll run through now, as of the 8th of October, new and existing, so anyone that joins up to the first, you know, for the 5 days that you'll get of it, won't be able to utilize any of their services any longer. Now, it's interesting the wording that they've used, because they've said suspend services, which makes me feel, they're not, it's a polite way of saying we're not leaving. We're just, we're stopping doing anything. You won't have any access to it. And I'll break that down in a bit more detail in a moment. Whilst hopefully they try and work with the FCA, the Financial Conduct Authority, to get around some of the promotion and marketing rules that they don't like, and how they can then work around those. But yeah, this is where it's at. So I'm trying to I don't think the first paragraph's anything new from what I put last week, but just to clarify all the points here. So for new users, anyone that's never signed up before, if you're to sign up now, as of the 1st of October, Bybit will not be registering any new accounts with anyone that identifies in the United Kingdom and is classed as a UK customer. For any of us that are already existing customers, as of the 8th of October, you'll no longer be able to make any new deposits, create new contracts, or increase any of their existing positions for all products and services. So that's why I mean, from that wording and that language, I'm assuming we can't even do spot trading either. They can, however, reduce and close their positions and withdraw their funds from our platform. And then effectively, you have until the 8th of January to manage those positions. If by the 8th of January 2024 at 8 o'clock in the morning, you haven't done anything with it, they will just liquidate whatever position you have. And then the only option that you will have left would be to withdraw funds from the site. So it is rather annoying. It's definitely rather frustrating. It's a fairly decent and safe, in inverted commas. It's certainly a user-friendly platform, which we can't use. Question to be asked later on about where potentially we can go, and we can run through those a little bit. One of the other things I just wanted to cover, because like I said, the language that used is quite interesting. And so it's just this paragraph, two paragraphs down here. So FCA has explicitly contacted all major players, us, as in Bybit, OKX, Binance, everyone. So straight off the bat, are other exchanges about to suffer or explain that they can't service UK residents? We don't know. We'll have to wait and see. Or have they found a workaround, or are they just accepting of whatever the regulation is? But as Ben Zhu, CEO of Bybit, has said, they contacted absolutely everybody. So this wasn't just them targeting Bybit because they didn't like Bybit and how they were working. Anyway, to go back to the quotation from the paragraph, and asked what our plan is to deal with the new law. And the new law is that if you use English as a language, they will see you as trying to solicit their users. So you cannot claim that you are in reverse solicitation. So last week, when I couldn't find out what the reverse term was, reverse solicitation. And effectively, in my layman's term and no legal understanding, that basically was, yeah, there were certain rules within the United Kingdom that were already in play about how you can promote and market to existing users. But if you used a third-party country, so if you were based out of another country, then you could get around those. It was like a loophole, because you weren't in the UK providing it, you were just providing this information from another country that wasn't under those rules. Well, apparently the FCA have changed that wording of that law now. So it's not about being based within the United Kingdom. It's if you write any marketing material in English. And so that's the issue, because obviously with them targeting the United Kingdom, they are going to be writing those promotional materials in English. So Zhu said everyone is in trouble. So everyone is thinking of plans of how to deal with this new law. And then for Bybit, like the most likely consequence is the exchange simply cuts ties with the UK altogether. And it looks like that's what they're going to do. Obviously, they're suspending it to just comply with the timescales that are set out by the FCA. And then if they can't come to any sort of agreement, then it's highly likely that that's it. They'll shut the doors and they will go. But I ain't closing my accounts yet. I'm just waiting to see what happens. A lot of people have said, and I was one of them as well, saying maybe you can get around this with a VPN. But as I understand it, if you've registered using a .co.uk email address, used a UK phone number, or when you've done KYC, have shown a UK bank account or address or something like that, passport, they're going to find you, they're going to cut you off. So access to your actual accounts will be where the barrier stops, not the IP address you're using to get onto the exchange. And then the news just rolls in. I mean, I'm not a customer of Chase Bank, but JP Morgan subsidiary Chase UK is to restrict all crypto transactions. So Chase Bank customers in the United Kingdom will no longer be able to make crypto transactions starting in the middle of next month. So Chase Bank, a subsidiary of financial services for JP Morgan Chase, will restrict all cryptocurrency related transactions for its customers in the United Kingdom. Now, I do wonder if that means also coming from an exchange to a Chase Bank account. I don't know the answer to that, but certainly it says as we go on here, will no longer be able to make crypto transactions using their debit cards or through outgoing bank transfers. So I don't know if the wording there kind of suggests that it's one way. You can't take it from your account to an exchange, but you can potentially move it back. But unfortunately, you just have to test the waters if you are a Chase account holders. The bank's representative, Chase, has decided to enforce the new restrictions due to an increase in fraud and scams related to crypto assets. And this kind of stuff, it actually pisses me off. And this is what I hate about all of the banks. I'm sure many of you share the same sentiment, in that it's our bloody money, and yet they're telling us how we can and can't use it. Like, wouldn't it be, like, I suppose you had to sign away a document or something along those lines that said, look, I understand the risk, and if I get frauded, I can't come after you. You know, I'll do this at my own risk. Whatever money I lose, you are not insuring me for it. Now, that would seem like a more logical way of getting around it, but it just seems to be this on-off switch. That's it. It's each company to go. And a lot of banks in the UK have gone down that route. And it's funny because bull and bear markets are keen to kind of sort of go through swings and roundabouts. I certainly had problems with Barclays back in the day. Now, Barclays were really good in the end with me, and I asked to have a conversation with the fraud department for about 2 hours where I explained what I did and why I did it. And ever since then, I've never had a problem. But that also coincided with me moving over to Swissborg, and I've never had an issue with them. So I don't know if that relationship is how that works. But I remember trying to set up a business bank account, and as soon as I mentioned the word cryptocurrency, that was it. They just weren't interested. And so in the end, I ended up going to Yorkshire Bank, who were a little bit more au fait with that. But anyway, yeah, so they're doing it for our protection because crypto is bad and scams can happen. Not that scams can't happen with fiat currency or anything like that. I mean, heaven forbid they actually stop us from wasting our money on gambling sites. But I don't want to, you know, sit here on my ivory chair and just get in some sort of rant about it all. But yeah, so that just came out today. So anyone who does have a Chase account, I'm afraid you're going to have to find another route to that. One of the other ones, this isn't necessarily a news article, and before I click onto it, I'm not doing this to have a dig at someone. We've spoken about this character before, but BitBoy Ben Armstrong, he has been in the news pretty heavily, crypto news that is, this last week. So this guy, effectively lost his company. There's you know, talk of significant substance abuse and, you know, alleged affair and all this kind of stuff. Basically, the company that oversaw BitBoy Crypto, or whatever it was, Hit Network, basically removed him from the company. He then went on to say, look, I've got no money left, guys. And so the irony was he then asked anyone who'd be willing to donate some money towards him, which was bad enough in the news this week. That, you know, that was crazy. And I think in like the first 24 hours, there was like 36 ETH in that wallet address. So let's have a look. Why don't we just do Etherscan and have a look? And I'll just do that whilst I'm chatting to you guys. But then to make matters worse, and I woke up today, you know, usual Tuesday for me is like just hit YouTube, hit crypto Twitter, just to try and get some intel on what's going on, check all the sort of the crypto related news things so I can try and formulate what I'm going to talk about. And my entire Twitter feed was just taken over by Ben Armstrong, because I can't do two things at once. Sorry, guys. So he's drained it looks like. And that's not a bad thing, because he said it was, you know, to pay for legal fees, etc. But at the moment, it's now only got 1.4. He took out 38 ETH not so long ago. So yeah, 2 days ago. So, you know, within like the first 24 hours, 38 ETH, which, you know, what's that? Around about 60 grand. So not too bad. Anyway, going back to what I was talking about. But he got himself into even more trouble because last night, I think it was last night, he was arrested. He was arrested, and I've watched the full 37-minute video. He was live streaming this at the time, so I don't think there's any ambiguity in what his intentions were. But without getting into it, he had his Lamborghini. he said stolen off him. But the parent company would say it was a company car and it was taken off him because he's no longer an employee. Anyway, he decided to go around to the person's house who had the car and try and get it back off him. To make matters worse, it seemed like he was certainly intoxicated and maybe having some more substance within him. He was carrying a firearm, and so the police were called, and he ended up getting arrested whilst on the live stream. Now, the other funny thing about this, and it's not necessarily a dig about him, I don't particularly like the guy. I think he's spent years shitting on the little guy. And so, you know, a bit of karma is definitely coming around. But there was one scene where I thought he was in a bit of trouble because he would not tell the police officer who was in the car with him. And the reason is because the person who's in the car was a person he had the affair with. So he kind of had to quickly explain to the 2,500 people watching the live stream that it's all right, his wife knew about it, whether or not she did or not. Well, I suppose we'll never know. But before the cop or the police officer, did what they do over there, he sort of very begrudgingly had to confess that not only who this woman was, but why she was in there and why he wasn't explaining it beforehand. So it's quite an amusing little thing. All this information or videos, etc., if you're interested, is out there. There's definitely some funny memes that have been created from it all. We'll follow this one, just see where it goes. But, you know, we've had a few characters over the years in crypto. And, back towards the end of the FTX saga, or leading into the FTX saga, Ben Armstrong, BitBoy, was, the one that was really giving SBF a hard time. He was the one who was calling him out first. And I thought maybe there's some light at the end of the tunnel. But it looks like this guy's turning into a bit of a clown character as well now. So be interesting to see what happens. I do believe he's been released on bail. I don't really understand what's going on after that, but we will update as we go through. Okay. And then the final article, and this is something that we're going to talk about when we talk about paper Bitcoin. So it was kind of poignant that it came up today. But Bitcoin exchange volume tracks to 5-year lows as Fed inspires BTC hodling. And this is, I was quite surprised by this because I've never really bothered to look into it. But this is talking about the difference between the spot exchange trading volumes and the trading volumes that are seen through derivatives. And the difference between it is unbelievable. But effectively, what they've said is that since March this year, spot exchange trading volumes have just disintegrated. And they are dropping to the lowest they've been in nearly 5 years. So according to new research from on-chain analytic platform CryptoQuant, by the way, I highly recommend CryptoQuant. Glassnodes is something you have to pay for, but CryptoQuant is free. It's really good. It's got pretty much all the same charts in there. So I highly recommend you check it out. They are showing that daily BTC spot trading volumes are at the lows rarely seen since 2018. So Bitcoin price action has stayed in a familiar range for several months. We know that it's kind of been between that 24, did get to 28, I suppose, but generally that 24 to 26 level we talked about last week, with interest in transactions appearing to fade. So the CryptoQuant data, which tracks activity on both spot and derivatives exchanges, highlights the extent to which volumes have decreased in the BTC USD entered the current range in March. So this past week, when we talk about amounts of transactions, we're talking about only 8,000 to 15,000 transactions. Whereas in March, one of the days, it exceeded 600,000 for daily spot transactions. So an absolute fraction. What we're talking about, what was that, 1.5%, 2% of what we saw on its busiest days, which is, as I say, kind of crazy, really. One of the main reasons cited is a growing fear regarding the macroeconomic scenario, allegedly. So the United States Central Bank perpetuate a constant feeling of uncertainty, leaving investors waiting for a possible recession. Effectively, what people are saying is they'd rather just hodl through the position that we're at without me having to necessarily read this article. Now, this chart here is particularly difficult to see, but I'm going to show you this chart a little bit later on, so we can actually break it down. But even from this, so what you can actually see on here is spot exchange volume is the purple spikes. And so, we're getting some pretty big days. Where's this one here? That's probably, I don't know, April. We got to just under 800,000 on one of those days there. And then look at it. Since May, so in March we might have got that high, sorry. Then since May, it's been an utter fraction of where it has been. And it is just tapering off. And like it says in the article, the lows we've not seen since pretty much the drop just prior to the final crash in 2018. Maybe that's a precursor for what's coming. I'm not suggesting that here. I'm just trying to show you that we are at the bottom of levels of interest for Bitcoin right now, certainly for trading Bitcoin. There's plenty of other sort of articles in here and people run through it. As always, I will post this stuff on and through. Right, let me just have a quick swig. And what we'll do is we'll just follow straight into what it is that I want to talk about. And that's whether or not paper trading of Bitcoin can lead to manipulation of the Bitcoin price, whether that be up or down. And if it is that a good or a bad thing for us? And, you know, what can we do as the average schmuck from it? And this all came about from a post that came onto Twitter. A guy called Willy Woo, he's an OG within the crypto space. As it says in his little bio here, he is an analyst, he does fundamental data, he has a large following. And I'm not here to debate his rationale or thought process necessarily in how it can impact it, because there are plenty of other people, the likes of Root, so the rational Root, the guy who wears the carrot to hide who he is. I know, you know, we still have that in 2023. Preston, Dylan Leclerc, there are loads of others. You know, they're kind of taking a different side for him, but they're not stipulating that his analysis is necessarily wrong. That, you know, paper Bitcoin does exist, just how that can impact the market. So I'm not really here to debate that, because I don't really understand it in enough detail to take one or other sides. And I don't think either side really put out a conclusive argument either way. I'll try and briefly cover each of them, just so you got an idea of what they're talking about. But the underlying comment is that there is an abundance of paper Bitcoin out there, and that is a problem. So Willy Woo, he gave a talk, I think end of August, token 24E9, might have been beginning of September. And then he gave a follow-up talk about 4 or 5 days ago in Sydney, where he was asked about all this again. So this is kind of where it's coming from. Hey there, Joel. This is a slide from my token 2049 talk. It's the ratio, and I will zoom in a minute, of paper BTC, so that's combined futures open value, that is traded versus the real BTC that is highly liquid and traded. We're now entering a regime of 20 to 30% more BTC being traded, and this counteracts the bullish supply shock. So what he's saying, and we'll go into it in a bit of detail, is whilst people talk about, you know, Bitcoin being finite, with the addition of paper Bitcoin, and there's two forms of paper Bitcoin. So you've got that derivatives and that leverage trade, that futures market Bitcoin, which we'll explain why that is paper Bitcoin in a moment. But we've also got the IOU Bitcoin, that I would call it, which is the potential Bitcoin that's on an centralized exchange, which has been sold to more than one person. A bit like what you have with paper gold. I truly believe, and we've talked about this in Avengers calls for a couple of years now, that is going on centralized exchanges as well. Matter of fact, we know it is because of what happened with FTX, which we'll explain a little bit later on. Anyway, to get back to even his first initial comment here, what he's saying is actually there's potentially up to 20 or 30% more Bitcoin being traded, which is having an impact on the price, than what there actually is in circulating supply. So let's just take the very bare minimum and just say that, you know, on all centralized exchanges at the moment, they store around about 2.3 million Bitcoin. So 20 to 30% on top of that, you know, you're talking about another 500,000 Bitcoin. And obviously that could potentially have an impact on the price, depending on how that paper Bitcoin is being traded. But also, people are thinking that there's less Bitcoin out there than there actually is. Now, they're not wrong in that sense, because there is only a finite amount. There is only 21 million Bitcoin that's ever going to be. But that doesn't mean that there aren't mechanisms out there for us to artificially increase it. And as we're going to go through, those increases might be transient. They might be contracts that just start and finish at a certain point and then just disappear into the ether. But for that particular time period, they're certainly out there. Clicking onto this and sort of having a look. So this is his initial chart. The reason I'm showing you this, I'm going to show you another chart later on, which has this overlaid on it. But what you can see down the axis on the left is sort of from 0.1 to 0.35, which is obviously representing percentage of increase in Bitcoin. And he's just saying over the years, what we've seen is we've seen it spike up as high as 35% paper Bitcoin, but we're currently seeing it trading anywhere around about 20 to 25 percent extra of BTC, and we've seen that it is steadily increasing. And so the question is, well, what is causing those increases, and how are we getting to that position? So I think what we'll do is we'll just spend a bit of time just to let you know. I do have some notes over here, so I'm looking at it on this side. I've gone like Simon does, and I've gone for the whiteboard. It's the first time I've ever used one of these. Normally I'm just a bit Janet and John with it all and just write it in Word. But so I've got to remember to scroll up and scroll down. So bear with me with that. So going back to the paper Bitcoin, what it is, let's just try and address that to start off with. As I mentioned to you, there's two sides to it, and I'm going to talk about the futures and the options trading, derivatives trading side of things first, and then we'll talk about the IOUs second. So we've got, and I'm not here to necessarily run through in detail what a futures contract is. I think that's covered in the course. You can go through and have a look at that there, or you can quickly Google it. But just a very quick overview of what it is. Oh no, I need to come back to that one. I don't know why that's in that order. So futures. So what is futures? Basically, with a futures contract, you've got two parties that are effectively betting or trying to determine what the price of Bitcoin is going to be at a set date in the future. Okay, now that's fine, and typically they last for a month. They don't necessarily have to, and sort of on the last Friday of each month, these options, these futures contracts get settled, which is why every so often you see news articles experiencing going, the delta's off balance or whatever, and there's a 400 million short squeeze or put option, whatever you want to call them, in one direction or another, and people are concerned about it. And that's because they have a set end date. But why is this a thing? So the point about this is you don't require the underlying asset to take this, because it's just a contract. So you don't necessarily need to have Bitcoin in your back pocket. As long as you've got USD, you can then speculate on what the price of Bitcoin is going to be in the future and make money off that. And that gets bundled up together. And I think that each contract is actually worth about 5 Bitcoin. But then that gets put into the derivatives and into the futures trading volume as actual trades. And so suddenly that artificially increases where Bitcoin's going. And that's very similar with when you leverage trade, because again, you don't need to trade with the underlying asset. But what you can do here is you can utilize leverage to effectively amplify the capital that you're using to whether or not you're going to long or short it, whether you're going to buy or sell the asset. And in particular, if you think about it when you're selling it, you definitely don't need the asset then, because you're going against the market. So again, real Janet and John explanation here, but let's just say I have 1 BTC's worth of USD value, but I go at 10x. When I place that order, that long order, I am actually placing the order with a value of 10 BTC. So again, we have artificially created an additional 9 BTC. I mean, really 10, unless I've done it as an inverse perpetual trade. And that's been put in at trading volume. And so it is creating that paper volume. And for both of those ones I explained, that's why they're transient, because they do have, time periods where they will run out, whether you close a trade on a derivatives leverage trade, you get stopped, you get liquidated, whatever, or with the futures trade, it just has a time period in which it's going to end. And so you do get those spikes that we saw on the last chart. It's not a linear progression. It's going to just depend on where the market currently is in terms of that. So there's definitely an opportunity there for increased amount of Bitcoin, which is, adding to that trading volume. And then from that, it can be manipulated. And the question, I suppose, is how can it be manipulated? So the example that Willy Woo goes through, I think it's good enough for me to just explain here. He's just saying, I mean, let's be realistic. If you've got 10 Bitcoin and you rapidly sell those, we're not going to be driving the price down here. We need to be talking about large volumes. So, okay, so it's got to be hypothetical. I'll go back to his Twitter thread in a moment. But in the actual talk he gave, he talks about, say you did have something like 10,000 Bitcoin and you wanted to sell that, and you wanted to sell that quickly, you could then benefit from selling it and driving the price down. How do you benefit from that? Well, you benefit from it from an arbitrage point of view. So you are very quickly driving the price of the futures market or the derivatives market down to whatever price that may be. And then suddenly you've got a difference in price between what the spot value is and also what the revised derivatives price is. But it doesn't necessarily just end then, because then you can take that opportunity to purchase at spot at the new price. And so what you'll suddenly have is, the spot price was up here, you drove the price down with your quick sale of 10,000 BTC down to this new level. Then as you start to buy it up, those start to level each way out. And then actually the spot price is influenced by that. It starts to be drawn down to meet the buying demand of where that is. And so that can manipulate the price. And it's done completely with fictitious sales in the first place. We talk about this with market makers all the time. I'm just making sure I've not gone over everything. I think that's... And then obviously it could happen in the opposite direction as well if you want to drive the price up. Do that, and then you could sell your spot BTC to take the profits on the way down, and it can move the price that way. And then you just rinse and repeat, and that is what market makers generally do. They don't actually really care about the price movement. They just want it moving in one way or another. And we talk about, the fact that when they're driving prices up, they're setting their short positions for bringing it back down, and then in completely the opposite direction of where that's going. And that's kind of what Willy Woo was getting into within this. I can't remember if it's this one. Yeah, it is. Now, this is where Root and Preston and Dylan Leclerc and a few others start to sort of chirp in and go, completely agree that there is paper BTC out there, but actually the way that you're explaining it doesn't necessarily mean it's going to hamper price that much. And I'll post this thread within there because Willy Woo's response is quite lengthy, and I don't really want to necessarily just be going through that, just wasting your time. But what they're saying there is, with a futures contract, you've got both sides of the option there. And with a derivatives leverage trade, that is exactly what you got. Whatever you're putting in, there's got to be someone on the other side taking that trade. And so they generally do balance each other out. And it can be quite naive to just think of it in that way, just to manipulate, that way. Now, again, Willy goes in to talk about, okay, well, let's put a completely ridiculous scenario within there, where he talks about that 2.3 billion worth of Bitcoin sitting on exchanges. And all he'd really need to do is find, 2.3 million, is find around about 12 billion USD, 5x leverage. And then, so he goes here, 5x leverage is the norm. So I'd need 12 billion USD and absolutely no BTC in my futures account to stop Bitcoin price from moving upwards, even if all the BTC available on exchanges are being bought up. This is where it starts to, potentially get a little bit over my head with stuff. And they, again, as I say, the debate continues through this discussion, but there definitely is a way of doing that, and we've seen that with gold. Gold, the spot price of gold and the paper trading of gold does get manipulated. As a matter of fact, where is it? I've got it here. Here it is. JP Morgan, September 2020. JP Morgan admitted to committing wire fraud in connection with unlawful trading of the markets for precious metals futures contract and unlawful trading in the markets for US Treasuries future contract and the secondary cash market for US Treasury notes and bonds. Now, the whole article is up here and it talks about them spoofing part of the gold and price manipulation. They did it to such an extent they were fined nearly $1 billion. $1 billion. So we know the big boys are definitely doing this. And there's a potential for them to be able to take that opportunity with Bitcoin. Now, we don't have a spot ETF at the moment. We do have several futures ETFs for Bitcoin. And so there is, like I say, that opportunity where that could continue to happen. To get into this crypto quant chart that we looked at before. So all that I've taken off at the moment. So this is the price that's overlaid. So I'm just going to remove the price and I'm going to remove the derivatives. And that's really hard to see, because it's all of it. So I'm going to drop it into, let me just put that back on there. I'll come back to this chart in a moment. I'm just going to put it onto the weekly. What you've got at the moment is the light purple is the spot exchange volume, and then the dark purple is the derivatives exchange volume. Okay, so now we take that off. It rebalanced the size of it. Of course it did. Okay, I'll see it this way. But just have a look at yesterday. There was 31,500 trades yesterday on spot, and on the derivatives there was over 500,000 of them. So we're talking a huge amount. I mean, this is nearly 20 times volume, 18 times volume for what we're talking about. So the actual big players here, what is really what everyone's focusing at the moment is definitely the derivatives market. And now we can start to sort of like move out a little bit. You can kind of see that that's still exactly the case, even on days where there's not much trading, it's the derivatives ones that's stacking up the majority of it. It's just because, going back to that original news article, there isn't much interest at the moment in spot trading. People are just hodling through where they find themselves. This is where, when you start to zoom out, you can hardly recognize the difference between the two colors. Shame on crypto quant for poor key of colors. But when we zoom out onto the 3-year effect here, you can see these large spikes up, but again, it steadily has been just cascading down. And we find ourselves where we are, which we saw in, I don't know which article, what's this article here? This is exactly the same information. It's just a linear representation because it's the volume ratio. And so what we're seeing at the moment, the last value is 0.06. That's what the spot is against the derivatives trade. So 94% of the market currently is focused on derivatives trading, and only 6% is on the spot trading of the trading volume in a 24-hour period. I feel like I missed a major part out of this. Yeah, so I think I covered that. Oh yeah, so what Willy Woo goes on to talk about is in this video is that, you know, yes, okay, spot Bitcoin price is what everyone, you know, kind of focuses on, and he fell foul of this because when he was doing a lot of his on-chain delta data back in the end of 2021, 2022, he was just looking at the spot information. But actually, it's the paper markets, the derivatives trading volume, which is king here. And actually controlling that is going to ultimately control the price. And so without taking that into account on your on-chain data, you're not looking at the full picture. And the reason he said he made the mistake was back in 2017, it was the flip. It was the opposite. We didn't have that much derivatives trading. We just had spot trading for Bitcoin. Yes, okay, the amount probably wasn't as high as what it is now, but the percentage was the other way around. And so you could just rely on the on-chain delta. Why do I keep on saying delta? Data to give you that information. And what he's saying now is, with these exchanges, you know, with them not being particularly transparent with their Bitcoin holdings and their wallets, with dark pools that they have, you know, that is very difficult to just solely rely on-chain data. And it allows them the opportunity, these market makers, these big financial institutions, to use the data from the dark pools, which we don't get to see, to play it for their advantage. And, you know, it's, once you kind of hear this stuff, it kind of makes complete sense. You know, it happens in the traditional markets all the time. Of course, it's going to happen here. I started using the example of Robinhood, but I quickly had to change that. So for us based in the UK, we can't use Robinhood as an app. We're not allowed to. But did you know that, as you know, a couple of years ago, any Bitcoin that you bought on Robinhood, you couldn't withdraw because it was actual paper Bitcoin. You know, there was no way of you withdrawing that to a wallet. And what Robinhood would then go and do is, because it was paper Bitcoin, they didn't have to put that data. It wasn't on-chain relatable data, but there were still trading habits that their users were using. And, you know, you think about 2020, 2021, you know, with GameStop and AMC and all that, you know, Robinhood was in its prime, Bitcoin was running up. There was a lot of people, millennials, Gen Zs, flocking to Robinhood to utilize that app. And so what they were doing is they were taking that data and they were selling it to their selected partners. And so we're so used in crypto for on-chain, you know, for it to be completely transparent. But actually, one of the biggest players at the time, because they were genuinely trading paper Bitcoin, they could just move that to whoever they wanted to. Financial institutes, you know, hoovered up that information to just garner the overall sentiment of where the market was going, and then they could manipulate it the way they see. Now, the reason I said I was starting down that route is because as of a couple of years ago, Robinhood did then start to actually sell genuine Bitcoin, and you were able to withdraw the Bitcoin. I've never been able to experience it because we can't use the app here in the UK, but I did see that that has been allowed, so kind of like poo-pooed my argument a little bit there. I think we kind of got to where that wants to be. So then Root, the carrot guy, he sort of comes along, and, you know, what he's saying is, I take it what you're saying, and you know, take that with a pinch of salt. But you remember I showed you that Willy Woo chart, and it had, it's in the dotted black line of where it was going, and it ended up around 20% of paper Bitcoin. Well, Root's gone and had a look at it. He's gone, well, actually, you know, you were looking at liquid supplies as well as what's on exchanges, when really, you know, we probably need to be looking at highly liquid supplies, and that should be factored in as well. And so they've revised their figure, and they think it's much closer to sort of 15%. So it still fluctuates, as you can see here. The data, is not denied, but he's saying it's not as big of impact. But even at 15%, at 2.3 million of circulated supply, you're still talking about another 300,000 worth of Bitcoin out there. And that kind of does get, this is a good article. You can sign up to the Bitcoin strategy. I haven't, because it's quite an expensive paid group. But even if you just sign up with your email address, every so often the carrot guy, excuse me, will send you certain newsletters, and they are pretty decent. Going through that there, he kind of goes through some of the impacts of derivatives, how that could affect the market, but then also why it wouldn't. So it's definitely worth a read. But that leads us on to the other side of it, which I haven't talked about, which is the IOU side. And this is something that I'd love to have the opportunity, the time to go through, but I'm just not that way wired in my head to be able to do it. But I've always suspected that given the amount, the brilliance about blockchain technology is we can see all the data. We may not know every single, piece of information about that data, but we can track it all. So since its inception, we know what every single Bitcoin's done from being mined to where it currently is now. Now, you'd have to go through a fine-tooth comb, but yes, we can follow that train. And so we know with a fairly decent level of certainty that actually the total amount of circulating supply of Bitcoin is just over 2 million. So at the moment, as of today, the exchange reserve, so all crypto stored on exchanges, is just over 2 million. We can see that over the last couple of years, that's dropped from about 2.7 million all the way down. It fluctuates, but it's generally tracking down, which when you look at on-chain stuff, that's generally a positive sign. Although again, we're looking at an entire bull and bear cycle here, because we've had 2020, the halvening just coming off it. Then we've had it increasing slightly up to it peaking at about 2.7 as everyone's selling it all. And then people are, this is not induced by price. This is just where it's going, as people are starting to obviously buy back in and moving it off exchanges, and we're getting back into that cycle again. So, okay, we've done that. But if we went through every single exchange and we went through their entire order books and we added it all together, I just can't believe, with the amount of exchanges that there are out there, the amount of crypto that certain cryptocurrency for exchanges are saying that they hold, that we wouldn't gobble up that 2 million in an instance. And so we must be at a state where we are actually trading other people's Bitcoin, hence the term paper Bitcoin. So they are relying on the fact that we buy Bitcoin off their exchange, but we don't self-custody it. We just leave it on there, which I imagine, although we hammer it in the group not to do that, the vast majority of cryptocurrency users do. They just leave it on the exchange, must be safe. I'm not really that into it to be bothered to move it. And so they get the opportunity to sell that. Now, again, that means that they get, a bit like fractional reserve banking. That's why I had this up here. They now have the opportunity to do exactly what the current financial system does. And we talked about, so I'm not going to go through it again. We went through fractional reserve banking again when we talked about the US debt issue. But fractional reserve banking is basically saying that there is a limit, in theory, in which an institution, a bank, must keep customers' deposits to a certain amount within their reserves. And so typically that's anywhere from 10% and under. All of them are listed here. But as we went through last time, most of the big players, it is either 1% or 0. So what we're saying is that, United States, UK, 0. Australia, 0. So what that is the banks don't have to keep any of your customer deposits in their reserve status. They can just lend that all out, do whatever the hell they want with it. No responsibility. And they're relying on the fact that we don't rush all back for it, which is why bank runs happen. I know I'm teaching you all to suck eggs here. And this is potentially exactly what's happening with crypto exchanges. We know it's what happened with FTX. Isn't Singapore the only 100%? Let's have a look. Also there. Singapore on my list. It's because it will have a special feature somewhere, I'm sure. I actually don't know. I honestly don't know. They're not on the list, and I'm sure they'll be doing well with that one there. But I'll get back, and then perhaps someone can have a little look. But we know this is what happened with FTX, because now when they've gone through the bookkeeping, as it says in here, they can't tell because the bookkeeping was so bad. But the estimates suggest that they had a minimum of 80,000 paper Bitcoin on its book. 80,000 just from one exchange. Now, to put that into context, in the entire year of 2022, only 330,000 Bitcoin were brought into an existence. So they're talking about an extra 25% of 1 year's Bitcoin supply was created by one exchange. And what happened? Exactly what happens on the bank run in the financial system. People were concerned about it, so they tried to withdraw their funds. But of course, everyone owned the same Bitcoin and they couldn't do it. And we know what happened with FTX. We're about to find out a hell of a lot more what happens with FTX. We'll talk about that a bit later on. So I'm going to post this article. I don't have time to run through it. It kind of runs through a fictitious example of how paper Bitcoin is very bad, what it can do for the price and how it can drive it. And it uses Exchange Corp as a hypothetical exchange. It runs through it all, talks about fractional reserve banking. This is outdated because the law suggests here's institutions can invest up to 90%. But we've seen in the United States and the UK, it's actually 0%. So they can invest a full 100% of what you have. And then it talks about like what happens when you have a bank run. So I'm not going to go through it all, but bottom line of it is this extra supply of Bitcoin, this extra paper Bitcoin's created, actually does absorb a lot of buying pressure. And so it does, or it can suppress the price of Bitcoin. And that's why paper Bitcoin isn't great, particularly in a bull run. We want it to go up. All these additional Bitcoins that people think they're buying, it is just absorbing all of that buy pressure. And that scarcity, that 21 million that we thought we were talking about, is bollocks. It's 23 to 24 million. And the problem is there's the opportunity for it to be completely unlimited. If you think about taking in futures contracts and depending, that's just relying on how much money, how many different contracts you want to buy. So it's not particularly a great opportunity. It definitely is an area of weakness that I think can be and likely will be attacked by institutions, just like it has been done with paper gold. Spot ETFs, they're certainly going to help to rectify that issue, but we still have the futures ETFs that are open, and there's still opportunities for that to take place. So as a retailer, what have we got to do? Unless you're suddenly going to find yourself with a large amount of money, you're not really going to be able to influence it. You've just got to protect yourself and know what you're looking at when you're going into those kind of markets. So the first thing to do to protect yourself, I am going to say it, once you finish purchasing off an exchange, get it into a hardware wallet, not your keys, not your crypto. I don't know how many times we have to say it, but sometimes we do. So yeah, that's absolutely the first and foremost. That Bitcoin, whether that actual Bitcoin, that real Bitcoin, yeah, I've got a real Bitcoin here, obviously, very real. That real Bitcoin is going to be worth a hell of a lot more once people cotton on to the amount of paper Bitcoin there is in circulation. Runs ever happen, you at least have yours off an exchange and you can benefit from it. From one, a security point of view, but two, that run is going to cause people to try and buy what actual Bitcoin they really have, and should hopefully drive the price. Anyway, now, what is scary? I don't know if this is true or not. I tried to click on this website, and as I started to work my way through it, it just kept on crashing. So take this with a pinch of salt. But Arkham Intelligence, they're like another on-chain analytic, are claiming that they have identified $25 billion worth of Coinbase Bitcoin reserves. That's 1 million Bitcoin that they believe is Coinbase's. Now, I've just told you there's only 2.3 million on all exchanges, so nearly 45% of all of Bitcoin is allegedly, and I am using that word allegedly because I don't believe it, Coinbase's. And 5% of all Bitcoin in existence is allegedly Coinbase's. Now, it feels to me like there's got to be something wrong there. That just doesn't seem to stack up. And how do I know that? Well, blockchain. I can just Google it. We can have a look at the top 100 addresses if we want to. And the exchange ones, not all of them, but a lot of exchange ones are listed. And I've been able to go through Binance's exchanges and have a look at so when FTX happened, they published all of their cold wallets. So we were able to go through and verify the amounts. Don't worry, that's an Ether one. That's a 1.9 million. And I've been able to go through here. Now, if that Coinbase statement is true, if, then all it takes is for the first 7 wallets to add up to 998 million Bitcoin. Now, of course, if that's true, some of these wallets may be Coinbase's, but you get my point. I'm talking about thousands of addresses here, and allegedly the top 7 make 50%, well, they do make 50%, and then Coinbase have the other. It just doesn't seem to add up. So there's got to be some, either Arkham have very poorly identified $25 billion worth of Bitcoin, and it's nowhere near 1 million, or whatever they've done, they've stumbled across, paper Bitcoin that's happening there. Now, I don't know. I tried to have a look for Coinbase's addresses. I couldn't find them. I'm sure they are there. You just got to know where to look. And to be honest with you, I gave up because it was kind of irrelevant for what I was really looking at. But you've just got to be aware of that. And so I do, going back to that, is Bitcoin price being manipulated through paper Bitcoin? I definitely think there's the opportunity for that to happen, whether that be them artificially inflating the actual circulating supply of Bitcoin, so adding into eating up the buying pressure, or with people being able to utilize contracts, so they don't have to own the underlying asset to drive the price in whichever direction they want to take it, and then benefit from that movement of price with the purchase or sale of the underlying asset. So there's definitely an opportunity there. The reality of it is, unfortunately, is we are too small to influence it. So we've just got to educate ourselves in where that could be and what that could be doing. Right. I think I've spoken quite a bit about that, and probably 50% of it was bollocks, so I apologize. But we're going to move on. Let me just have a look at some of the things. Bijan Moonbeam listing. Yep, we'll cover Moonbeam a little bit later on. 338 projects on Moonbeam. I mean, for a project, everyone knows I like Moonbeam, and we'll talk about it, but just very quickly, there's not many projects you see in a bear market which is getting so hammered in the price and yet having such a level of development on it. This is a sleeper, I assure you. I know, I'm the .moon boy in the group. I get it. But there is such a hive of activity happening on Moonbeam, okay? And the price is just going down and down and down. This will lead to an explosion. I truly believe it. Whether or not we're going to get to some of the ridiculous levels that it launched at, $44, $12, $6, I don't know. But it's definitely an opportunity for that. And, the price is going. I don't think that pump is going to last. I do think that will retrace. And we'll go over that a little bit later on. Isn't Singapore 100%? I'm not sure. If it's 100%, it won't be on the fractional reserve list. That's a very good point, Chris. I think it's the first 75k. So the FCA have a similar where, like, your initial 80 grand, is it 85,000, 170,000 of a joint account is covered, is insured with the FCA. So I know a lot of them have some sort of rules about that. They increased it 5 days ago. Okay, there we go. Does the no projects on CAS scale? Well, we'll talk about CAS a little bit later on. They've got a lot of work to do. I say that each week. Hyper momentum is one thing. Delivering for me is another. But yeah, we'll talk about that a bit later. So we've got to the part where we're going to go through some of the questions. And as I say, let's just refresh it in case someone's dropped one. No, it doesn't look like it. Okay. I'm going to just move this onto another screen just so I can read and have the charts up at the same time. But thank you, Adam, Richard, John, and Ads. I will go through these. So thoughts on master or MicroStrategy chart. Do you own any or looking to purchase any other crypto stocks which you are looking to invest in? Well, no. Short answer is I don't own any. Am I looking to invest in it? Probably not. Maybe as sort of like just a diversification from a Bitcoin side of thing, but it hasn't really crossed my mind to do that. And for me, the reason why is fairly simple. I'm too lazy, and that's a genuine thing. So I kind of like a lot of things very simplified, and I actually do have an investment portfolio. And that question today made me have a look through it. I thought, well, maybe, I just got a report a couple of weeks ago. Maybe I've got some stock in there, which says I do have some MicroStrategy. I don't, but that just gets run by someone else for me, and they just do whatever they need to do. And so I kind of leave a lot of investing in that kind of stuff out, because I've got a professional who apparently knows what he's doing, and to be fair, he knows his damn sight more than I do doing it for me. So what's the point in taking that risk on myself? I might as well just let them do that. So no, I don't actually own any stocks. Well, that's not true, but I don't actively do any myself. I keep on threatening to like sort out my pension and do that, but I just haven't even got around to doing that. But thoughts on the chart, let's have a look. So I actually do have a little crypto firm section here, because you know there's ones that are interested. A lot of them are mining firms, but they're not all. And so MicroStrategy's on there, and I think that's the one thing about MicroStrategy is it pretty much mirrors BTC. Now obviously they decided what they were going to do in 2019, 2020, and that's when it starts to mirror BTC. Up until then, not so much. But then they started to get into this big, and then suddenly we've had the big run up that we saw everyone else do in sort of early 21, crash back down over the summer, and then back up for the winter. And then we've had the corrections, we've had it bounce up and down, and then we've had it climbing up like we've seen this year. And it mirrors it. So, you know, whether or not you are long-term bullish on Bitcoin, you're going to be long-term bullish on MicroStrategy. They own so much of it. How can you not be? They just recently bought another, what 5,500 BTC for another 147 million. I think they've got over 150,000 Bitcoin at the moment. So when we talk about circulating supply or high liquid circulating supply, so what they mean by highly liquid circulating supply is any Bitcoin that's sold on an exchange, and I think anyone that's moved Bitcoin to a wallet for less than 155 days, and I think that's around about 3 million Bitcoin. So we talked about 2.3 on exchanges, and then there's around about another 700,000 that falls in that category. Now I might be wrong on the timing there, so if someone wants to correct me, feel free to. But it's 3 million, so they've got 150,000, which is 5% of the circulating supply, or highly liquid supply Bitcoin. So they are, you know, players. So for me, it just feels like, well, I'm into Bitcoin. You know, I've got my Bitcoin, and it's my Bitcoin. So I don't have to worry that it's its own entity. I don't have to. Well, I was going to say Michael Saylor doing, you know, wrong stuff, or whatever. But I don't have to worry about the board completely messing something up, and, you know, some, you know, major problems with the company, because it is an actual company. It's just a company that invests heavily in Bitcoin. So I don't necessarily have to worry about that, and that's also a risk because they could keep on doing well and benefits from that. But you know, the chart, it looks good. You know, we've suffered the bottoming pattern that we had in the winter of last year, and you know, we're still in that upward trajectory. Yes, we're on the weekly chart here. The only thing I would say, which is of alarm, is we have gone and breached. You know, we have gone and breached the CMA. Let me just double check what it is. I assume it's 21. Yeah, 21 EMA. So, you know, we have closed below it before, but we've closed below it. We're gapping down. We've still got 3 days until that happens. But that potentially could mean that we are starting to look at a reversal. And you know, the key target now would be 280 for me, because I want to see if we take this low out. And if we do take that low out, we potentially are reversing the trend and we're heading back down. So that's something for me to, well, I'm not looking into it, but something that I would be looking at. What's going to be the main driver for whether or not we lose that? I think it's going to be Bitcoin. You know, it mirrors it. So if Bitcoin's value falls, then it's going to drive MicroStrategy down. Nothing MicroStrategy do really moves the price of Bitcoin. It's the other way. So I do think MicroStrategy is at a disadvantage there, because anything good it does, yes, it might move it a little bit. Anything bad it does, maybe not. But it is just subject, behold, to whatever Bitcoin does. So yeah. Any other crypto stocks you're looking at? Well, I mean, people that I chat to, you know, are sort of into some of the stocks. A lot of mining companies, so like Hut 8, Hive, Cypher, this is Algo, we've got Marathon, and we've got Riot. So they're the ones I sort of look at. And NVIDIA as well. Now, NVIDIA is an interesting one because NVIDIA has been on a hell of a rip this year. Anyone that's been investing in NVIDIA, well done. I think you've done very well. But they've changed their stance. They're not releasing any graphics cards for crypto in 2024. So for those of you who are into your gaming graphics cards, we're in the 4090 series. So I think there will be a 5090 series. I just don't believe it's coming out in 2024. So what that's going to do for the stock price next year, I honestly don't know. And you could argue that there's potentially some sort of M formation forming up there at the moment. But from a crypto point of view, is it still now a crypto company if they stop doing graphics cards for mining rigs? I mean, it doesn't mean that people can't continue to put them in rigs, but they made a lot of money in previous bull runs focusing on the crypto sector. So yeah, I think they're focusing more towards AI for the foreseeable future. So I'm still going to leave them in the crypto firm section. But in terms of some of these other mining ones, the reasons that I mentioned before, I've never really had to look into them. I have them up here because occasionally we do talks about mining companies and where they currently are. You look at Hut. Hut had a fantastic start to the year. It went from 77 all the way up to $4.30. So, what's that? Like 6x and its price. Now, it's obviously pulled back quite hard from them in the last, since the Dixie's been on its run. Much like the S&P, this has started to fall quite hard. And it looks very similar across the board on a lot of the mining companies. They've all had that similar kind of issue. The only one that's slightly different is Argo. Now, I'm trying to work out potentially why this is, because this chart's in pounds, I believe. So this might have a double jeopardy, I suppose, of dealing with, a pullback as everyone else is having, and then also having to take into account the conversion rate of the dollar versus the pound. And the dollar and the pound, we just click on this one here. Pound is struggling against the dollar, which for me is great. Do that because I'm in dollars at the moment. So I'd rather it came back down. I missed the opportunity to take any play there. You talked about Argo here. Argo blockchain, thoughts on fundamentals charts, and do you see this as a failing company? Well, I don't really know too much about the company. So just looking from the charts point of view, I just think it's moving the same as the rest of the S&P. These companies are, certainly the rest of the mining companies are. I wouldn't necessarily say it's a failing company, unless you're going to tell me, because I don't know the fundamentals, that they are having significant issues with mining, loans paying off and all that kind of stuff. I don't know. I mean, I didn't know if you can do this. But if you right click on any of these, you can then go to a financial section. Kind of does give you a summary of the finances. So you can do like a little overview and go down there. So this one, estimates, it has missed its estimates last 2 years in a row. Same with the earnings, which is never great. Debt level and coverage. So in 2020, free cash flow, they were minus 213. Problem is they're just figures. I don't know I don't understand the rationale or the reasoning behind any of these. So I'm just throwing out my numbers. But for any of you that do particularly follow any company, just right clicking on it, hit financials, and it will give you. I can't guarantee how up to date and accurate it is, but it certainly gives you an idea, and you can have a look at statements, statistics, dividends if they do them, earnings, and then revenue. So, interesting information. So sorry, Adam, I'm a bit crap there because you've also asked about Hive as well. In terms of the gas BTC trade, yes, I would look to get back into this at some stage. You said a nice spike. I was on the trading pub when, I don't know if it was yourself or someone else mentioned this. I don't think I was particularly enamored by the gas BTC pump from last week. So just how do I close out? There we go. Let's just put this onto the daily. Oops. So that's BUSD. Just a second. Gas BTC. On. What did it move from? Let's have a look. Maybe I'm being a bit too overcritical on it. Price range. I mean, it went up 25%, so yeah, okay, fair enough. In terms of a spiky fade, which is kind of what we do, or certainly what I do, it wasn't a spiky fade as such. It was just, that was over a couple of days. Okay, it dropped down pretty quickly over an hour and had a rest and then dropped again. That probably would have been quite difficult to time. But if anyone did get in on it, then well done. The problem I've got at the moment is where do you get in? So if you remember when I was drawing this previously, eyeballing it. It was like there. That was the bottom of the level I was interested in. We've lost that at the moment. And I can't guarantee where it's going. Now, you could argue that there is a potential double bottom formed here. Maybe it's coming down for a triple bottom. So maybe there's an opportunity, you know, if it does get all the way back down. We have lost this EMA here. Sorry, I realized I've got to zoom in because you probably can't see that. Maybe trying to get in around about sort of 8.5. 4 zeros and then 8.5. If it is going to come back down and then take another opportunity, because it hits this, we do see some spikes. And so then, you know, maybe you can get in at 8.5 and you sell, I don't know, 10 or something. You know, and if you can, there's an opportunity. The problem I've got at the moment is just, is it worth the risk? Is that worth the risk right now? And for me, at the moment, if we said 20% increase, I just don't know if it is. We know alts are struggling. We know BTC dominance, although it is coming down. We'll go over dominance in a little bit. It is, you know, it is relatively high compared to it, and alts really have struggled. And so I just don't see, we've lost that zone there. I'd rather wait until it gets back in. You know, if I'm going to spiky fade, what I have done in the past, we need that consistent range. And for me, and sadly, there's just no guarantee I don't lose it again. So it's not worth the risk. I'd rather just own the BTC outright at the moment. That's my thought on that one. Let's just zoom in a little bit more. Okay. Richard's put, are you able to talk about how price fluctuates compared to market cap? Just looking at Filecoin as an example, I know there's release schedules to consider for the token release and circulating supply, but I'm trying to get my head around the maths, not my strong suit, to work out how the price of Filecoin got as high as 237 on CMC and approximately 12 billion market cap last bull run, and now sits at $3 with a 1.5 billion market cap. So the price would need 79x to reach its previous all-time high, but does this also mean the market cap would need to now get to 118 billion for it to reach its previous all-time high? Thank you. Okay, I already know the answer to this one straight away. As soon as I saw what you were writing there, this is solely down to release schedules and circulating supply. Absolutely. I mean, we're going to go on to CoinMarketCap now, but I bet you whatever date its all-time high was, there was a significantly less amount of circulating supply. Because you're right. I mean, we can work it out. We can work it out. I mean, I'm going to have to get my calculator out here, but let's just go on your figures, and it will be rough. But if there was 12 billion, I have to turn it sideways, 12 billion. And then what did you say? It got to 237 divided by 237. So if those figures are correct, then there should have been around about 5 million file coins in circulation. Was it was going around. So let's have a look. Well, before we do that, so 5 million. And then we've got one. Oh, wait a second. Yeah, 1.5 billion. Let me just do that right. You know what? I think I just did 1.2 billion. Just bear with me. I didn't do 12 billion. I did 1.2. 12 billion. There we go. Divided by 237. Yeah. So it should be 50 million. 50 million at the time of that last all-time high. Okay. And then we've got 1.5 billion. Divided by 3. I could have done that. 500. So if it is a supply issue, which it sounds like it's going to be, at the time of the last all-time high, there was probably only 50 million tokens there or thereabouts in circulating supply. Whereas at the moment, we're going to be 10 times that amount. And that is why it's so important to consider circulating supply and release schedules when you're looking at things like all-time high. So we want CoinMarketCap. We've also got to bear in mind that CoinMarketCap is notoriously wrong. So it could be that too. Okay. So look, yeah, circulating supply is 451 million. So check. That kind of lines in because it wasn't 3 on the dot. It's 3.19. And the fully diluted market cap. We don't care about fully diluted. But the actual market cap's 1.5 billion. But if you know what I'm going to do? I'm going to go to Masario. Sorry. Because I can get a chart up there which will tell me what the circulating supply is. Filecoin, there it is. I should have had this chart up earlier. Sorry. Charts. Supply. Here we go. So all time. Tell you what I should have done. When was all time high? Sorry, look at this. Amateur hour now. So all time high was on the 1st of April 2021. The 1st of April 2021. Well, I got the 5th, 65 million. So yeah, we're now 467. So that's it. That's exactly why it is. So what does that mean is, okay, well, what price do we need to get to for all-time high? And to get to the all-time high of 237, then yeah, you're right. In theory, we have to get to 118 billion market cap, assuming that there's still a release schedule. So overview. Okay, I was hoping overview would actually give me. Maybe not. We'll go back to here. I mean, look at this. We've still got. We've only. I'm trying to work out the percentage, but our circulating supply versus total supply, we've still got another 1.5 billion file tokens to come out. I don't know what the release schedule for that is, but that's a lot. So, that, however long that's going to take to come out, is going to significantly, restrict its opportunity to get back to all-time highs. Absolutely. And it's a great lesson to learn in terms of taking this kind of information into account, so whether or not all-time high is realistic. But to get to 12 billion based on circulating supply now of 450 million, I'll tell you, I'm getting as bad as I am. There was a time I'd be able to do all this in my head, but not anymore. It needs to get to 26. So if you get to $26, $27, and you're going to reach a new all-time high in terms of market cap. So from where that is at the moment, that's about 7x, 8x from where we are. So it depends on what you're looking at from all-time highs. But, realistically now, to get to 237, whilst not impossible, that's a big ask. And so that's a big, for me, a huge red flag on Filecoin. It just has to be. I'm wondering if there is. Let's have a look. Token unlocks. Filecoin, here we go. So interestingly, this is saying here that 940 million have been released. Gotta love it when whilst I was looking at it. It's the upcoming event. I can't be right. Alright, we've got a simplified version of one here. It's difficult because every time I put my cursor over it, it's going to move, but you can kind of see the curve that it's got to face though. So we don't have full dilution until 2047. So next bull run, let's have a look. Let's say peak bull run, we're going to believe everything else. December, there we go, 2025, we're 1.2 billion. So now it's just a case of, is that 300 million on top of 450 million, or is it on top of the 900 it states here? But yeah, we've got either a third or almost half of the tokens again to be released. That's a lot. It is a lot. Now it's saying circulating supply is 450, so I'm not sure what token unlock is basing that on. I think Filecoin is on the list for it's off-chain verified. Is on the list for a research token, so maybe we'll spend a bit more time and have a look at it. But that hopefully answers your question in terms of why and how that has differed. But you've got to take that into account. So every time you're looking at an all-time high and you don't think the maths adds up, look at what the circulating supply was at the time of all-time high, and hopefully that will guide you in the right direction. Richard Zemper, if BTC is expecting to run above 100k next bull run, potentially even higher, and always runs first, should we not get into BTC before buying alts, then flip into alts once BTC has started running? I know you also follow Trade Travel Chill on YT, and she did an interesting video about timing your altcoin buys recently and how the market runs in order BTC, ETH, and then altcoins, etc. But during the next bull phase, do you think alts will also rise with Bitcoin? Therefore, you don't want to miss out on potential gains whilst the market transitions from BT dominance to alt season. So I'm kind of hedging my bets, what I'm talking about. And if I just, I've got, two pots, because I've got a business and then I got a personal side. The personal side's pretty heavily diversified. I'll go through my portfolio a little bit later on. The business side's solely BTC at the moment, and that's what I'm just building, and it gives me the opportunity to do that. But what I want, bull and crypto, bull run cycle. Where is it? Here we go. Waiting for it to. I've just done on the screen in case something random popped up, but it's all right. So this is it. Path to alt season. It's called. This is like the bread and butter. If anyone knew, this is how it typically has flown in the past. So bull run gets going, halvening, whatever you think triggers it. Money generally flows into Bitcoin first. Dominance of Bitcoin increases, which is kind of what we're seeing at the moment. Then people start to take profit from Bitcoin and move it into blue chip alts, and typically that has been Ethereum in the past, because Ethereum has been the stable in the last bull run. The first one in 2017, it was fairly new on the block as well, but there wasn't much competition. 2021 certainly cemented itself there as number 2 altcoin. But then when people, they've made some money on that, they'll then start taking profits and put that into larger cap ones, so anything in the top 50, and then after that it then goes into the 1000x opportunities. And so this, in theory, is the perfect flow of how to do it. The problem is, as you say, timing it. When do you maximize what it is? So I may, people may not have agreed with how I've done it and where I'm looking to do it, but I'm quite happy at the moment to build my position with large caps. I don't own any Ethereum. I just don't like it. I think there's better ones out there, and so I would rather split what I would normally have put in Ethereum either into Bitcoin or into the large cap alts. But I'm happy to pick up the large cap alts, and I generally do, and then on the right hand side there in the medium terms, although I don't hold a few of them at the moment, and just sort of benefit from just building a stable position from there. Now, yes, again, some people could argue, and I had this conversation with a few people this week, that I could have sat on my hands all year, done nothing, and been in a better opportunity to buy. But again, that's about timing it, and I'm more than happy. My average dot buy is, I think, 488 at the moment, and doesn't take into account staking rewards. So, yes, I bought higher and I bought lower. I've had opportunities to do that, but I've just built a good foundation for when the bull run comes, I'm there. But you are right. In theory, if you were starting afresh, then you could certainly be looking at moving the funds through the phases, and particularly where Bitcoin's at the moment. You look at Bitcoin dominance, or you look at altcoins against Bitcoin dominance, and they are on the floor, and they don't look like they've got signs of recovery. So getting in Bitcoin now and knowing that you want to move into an altcoin later on is probably the better move. You just then got to familiarize yourself. Let me just minimize this with these charts, with these ones, the BTC pairs. So DOT, this doesn't look like this is changing market structure anytime soon. So DOT will continue to bleed against Bitcoin. And you can just sort of go, okay, well, I've got my Bitcoin in now. Not the best entry, because I could have done it a while ago. But if this continues to drop, that same amount of Bitcoin is going to afford me more DOT. And so you just then make an idea or a plan of when it is that you want to switch that over. You switch it over, and then what typically happens with altcoins, let's just put it on the 5-day and zoom out so you can see it, is that altcoins then outperform Bitcoin. And so it rallies up, and then you sell your alt back into Bitcoin, and you get more Bitcoin than what you've had to start off with. But you've got to familiarize yourself with these tokens here, this charting. It's not bothered about dollar if that's the route you're going to go. And it's, you know, it's a fairly acceptable route. Absolutely. Richards puts another question. Do you know how FTX, which is pretty much dead, sat at $1, still has around 400 million market cap? Well, this is another fairly simple answer. And that's because people are still buying it. And there's a circulating supply. So, you know, you think about any crypto, effectively, the price that we see at the moment is the last traded price. It's the last price that some sucker has agreed to buy it. And then all that CoinMarketCap does is it goes, right, well, if the price is at $1.18 and there's 328 million of them in circulating supply, even if they are useless, we'll just do that multiplication. And then that's why we get over 400 million. And I've had this argument before with the likes of Casper, you know. The vast majority of Casper, I still assume, have never hit an exchange. It's been mined and kept in hard wallets. But all that happens is you've got the circulating supply, and then you've got the genuine, actual, real, whatever you want to call it, circulating supply, the supply that's actually been actively traded on exchanges. But every crypto, not just Casper, not just FTX, FTT, they get to benefit from, you know, the multiplication that we do. Whatever the last traded price is, times by market, the circulating supply equals market cap. And that's the same with FTX. There might be people just sat on this dog shit token. They can't get rid of it. But, you know, the odd person is buying and selling a bit of it. And so it floats it. And you look at the volume, you know, it's got a $417 million market cap. But I mean, the volume's not the worst in the world. It's got a 24-hour volume of 15 million. It's down 55%, mind. But yeah, so that's how market caps work, I'm afraid. John's put, imagine you had 50 grand and you knew what you knew today in regards to crypto. Which cryptos would you buy, assuming that you had the knowledge, but not the cryptos in your portfolio? I mean, I'd always put Bitcoin, definitely. I mean, this is a boring answer, but it'd be very similar to sort of what I've got in these two here. I mean, I joked about it, but if I knew nothing about market structure and I saw the Casper chart, I'd be fairly comfortable to buy fairly comfortable to buy right now on a bigger picture, like on a weekly. I'd be like, okay, you know, it's had its pullbacks and climb, but this feels like if that's going to continue, that's it. So, but what would I do? I would just rely on what I know, how to research a token, how to look for sort of solid tokens, not necessarily even diamonds in the rough, diamonds that were already on a ring because we already knew about them. What I would certainly be doing, John, is I would be utilizing the vast majority of that 50k on absolutely solid tokens. And you know, if it's the first time you've done it, you've no experience, and you know, losing your cherry, whatever you want to call it, to, you know, on Bitcoin and Ethereum is not a bad way to go. We know they're going to be solid performers. They are going to give you some returns in a couple of years' time. And then what you can do is when you're into the bull season, you can start selling portions of those two assets to create a new pot to then go into smaller market cap assets and just rinse and repeat. You just got to remember that the gravy train does end after a certain amount of time. So don't be left holding a really crap bag of something right when the market's about to pop, because that's going to be hard to get rid of. It's kind of, unfortunately, the greater fool. You just need to find someone else to try and buy it off you. But you know, for those that are new, my long-term holds are Polkadot and Dot. The reason Casper's up here is I have an app on my phone that just overlays the top 3 tokens that I have in this chart here. And so many people ask me about Casper. I've just moved it up. It was in the medium terms. It was also down the others. But so that's just there so I can see it. That one, Bifrost is a bit of a hedge. Multiverse X, it just keeps on rebranding. I'm losing love for that. We're going to talk about Glimmerlay. Chainlink, solid project, very good. I've made a big mistake on this recently. It's cost me quite a bit, which we'll run through in a moment. Polygon's great. OKX is an exchange token. Some people don't like exchange tokens, and I can't diss them for that because they get a lot of, you know, value for not really bringing much to the party. But I really don't like Binance. I think it's had its run. I think it's massively overvalued. I think OTAX is an exchange that will explode. So that's going to be my exchange token. Near Protocol, I'm a big fan of. Quant, I'm also a big fan of. And Harmony, or Oasis, or Rose, I'm a big fan of. So, but even those medium-term holds, they're a mixture of gambles like Bifrost and I suppose Rose really, with other tokens here that have had, you know, solid runs in the past, great fundamentals, and, you know, are solidified as blue chip alts. So mine's a pretty bland, vanilla kind of approach. There's other guys in the group, you know, they're 100% into CAS, and that's great, because if that thing does explode, as it could do, then that's ka-ching time. For me, the risk there is if it doesn't, you put all your eggs in one basket. So, you know, that's a bit of a sad event. And sadly, you know, there's plenty of cryptos that have had great starts and, you know, great hype behind them. But unfortunately, hype isn't everything. You need to move through other things, other developments, and prove you can do it. And I get it. I listen to all the threads, the spaces, everything else. But at the moment, all I still see are very passionate individuals speaking about hype, about things that have to happen, not things that have happened. Until that happens, I can't fully commit to it. And I don't mind missing the beginning of the run, because if it does deliver on everything that it says it will, then it will be an excellent token. And I'll be able to ride up and maybe only get the last 50% of the move. And you guys will just have to invite me to your private islands. But I will arrive in style in my own aircraft. So, yeah. I don't know if that answered your question there, John. What is my current portfolio allocation? I don't know if I've posted it recently. I'll give you a very rough breakdown of it now, and then I will post it in chat afterwards. My Bitcoin is probably around about 33%. My DOT's probably around about another 33%. So, you know, about 60% of my tokens are split over those two. At the moment, I have sold my CAS, sold my BNC, sold my Link, sold my OKB, sold my Quant, because I can't stake any of those. So I'm not getting any passive rewards. So they were, you know, anywhere between 5 and 10% each of those, but they're all sold and back into USD. So I have near's a big one, probably about 10%. Links, Matic is about 5%. This is probably going to add up to 100% because it's of what I've got in crypto. But I actually sit. Oh no, I'll finish this section first. Glimmer is another big bag of mine. About another 5%. Egold is actually Multiverse X is, I think, probably about 3%. That's got to be close to getting to sort of 80%, and then where these that I've sold would have made what was 100. But in the grand scheme of things, I'm about 65% in crypto, 35% in stables at the moment, and that's because I obviously sold some recently. Some of them I did fantastic on. You know, good moves to sell. You know, sold BNC, OKX, and Quant either at little bit of profit or break even. I sold Link at a monster profit, fantastic. And then I watched it at $5.80 and I didn't buy. And look at that, it's been on a rip. And this is one that I've just missed. I did manage to sell half my bag at $8.24, I think it was. So yeah, but you know, I'm just going on the fact that we've still got a bit of time to the halvening. I've got a feeling that I've just missed this leg up. I'm not going to FOMO in here. I'm going to wait. And if it takes a couple of months to get back down, it takes another couple of months to get back down. I've got the time on my side there. But that was a, yeah, unfortunate mistake. You can't win them all, unfortunately. Could we do a poll on Telegram to see how much CAS everyone has? We can. I think it'll be. I've done a few of these on the live streams. Now a lot of people watch it back, so they can't contribute. So I will more than happily ask Lewis to put one of those out tomorrow. And then adds us, but new member here. Fortunately, won't be able to make the live session. I do have a couple of questions. For context, I just finished the Beaver module and I've started level 1 module. So if you had £500 to invest trade, where would you start? The question about 50,000, but divide by 100. Would you invest in BTC? Yes. Seen a lot of talk about CAS on Discord. The Discord group has gone very CAS heavy, and that's, you know, that's fine. People are passionate about stuff, and I would rather people talked about CAS until the cows came home, because they are at least educating themselves. But yes, people are talking about CAS. All I'd say with anything, particularly cryptos, is don't invest in anything you don't understand. That sounds boring, and I don't expect you to be able to write the code or anything, but you at least understand what it's supposed to do, what it currently does do, where it's going to go. And so, yeah, people are talking quite a lot in the group about CAS. Yeah, I will put, I mean, at the moment, I've sold it, as I mentioned, and 1 or 2% I had. I'd probably get to about 5% by the time I'm done, you know, unless it starts to deliver on something. So I think Kaz has the potential, but for me, it sits in the risk pot. So that's just my opinion. Siam, if you listen to him, he will tell you it's the utter bee's knees. He is all in on it. And good luck to those that are. Trading currencies, what would be your approach? I see a lot about Kaz on Discord and trading currencies. What would be your approach? So that's a tough question there, because there is definitely, trading currencies is simpler in terms of patterns play out far better. And so you've got that opportunity to do it. It's not as volatile, and it's not on 24/7, 365. So you get breaks to recharge. It's definitely worth it. The returns aren't there, and that can sometimes put some people off. But if you're just a disciplined trader and you're happy to make your 5%, 10% a year, whatever, and it's a great place to do it. Certainly a great place to cut your teeth. Also, with Bybit stopping its activities in the UK, where's the best place to trade crypto? So I've got a few accounts. I've got OKX, I've got Qcoin, but I've actually just opened up BitGet today. I've not traded on it yet, so I can't, verify whether it's any good or anything like that. The reason I opened it up is I was worried with the comments that Bybit made, saying that the FCA had reached out to everybody, and I thought, right, well, they're putting in rules about no new members from the 1st of October, and I was worried that others might suddenly go, right away, guys, yeah, we have come to an agreement with FCA, but we ain't taking any new members from the 1st of October. So I was just like, sod it, I'm just going to sign up to it. Cost me nothing. I verified myself. I'm not one of those people. I'm not afraid of KYC. So that's all done. I'm ready to go. I have, believe it or not, gents and ladies, fired up the old Bybit account. That's it. I jumped on Bybit yesterday. To short Glimmer, because that was a hell of a pump, and that kind of thing interested me. And it was a great, trade for me, because I have a decent bag of Glimmer. It was kind of like, if this goes the wrong way, then at least my bag's increasing. But, if not, then do it. And I got in at 24.8, I think, something like that. So I don't know where that is, about here. I took 50% profit when it got down to about 22. This ain't the right chart. There we go. And then it came back up. I'm basically back in about the similar level to what I originally went in at. So I made about a 20% profit, 25% profit on that drop. I'm back up to it, and I'm just waiting to see. I see, unfortunately, for Glimmer, this riding all the way back down. From fundamental point of view or technical point of view, we didn't clear 28.7. This was just too much of a pump off some positive news, and I see it just trickling back down. So I'm planning now. I'll move my stop, so I don't plan on taking any profit really until we get sub 20, and then I'll start to have a look. But unfortunately, I see Glimmer continuing to drift all the way back down. For those of you that aren't aware, it's a parachain. It's got a release schedule, and its release basically ends mid-November. I can kind of see by mid-November we're going to be looking around about 12-13 cents, in my personal opinion. That's when I'm going to finish buying my bag of Glimmer. It's when that happens. I'm going to buy. I'll just sit on it and stake it, and it'll be what it'll be. But yeah, I might try and ride this down as best I can. So yeah, I'm back. I'm back in for Bybit. It's been over a year, and I'll get one trade out of it before I have to close the account. It'd be nice to end on a winner, I suppose. Right, that's got to the end of those questions. I bet there's a few on here. Bloody hell, there is. Okay. Time's assumption that people will build on it. It's going all the way back. Okay, so there's Bijan. They're really behind Sol, Glimmer, AVAX, Atom, name a few. There are a lot of catching up. Yeah, so this isn't necessarily about Kaz. I think the problem you've got is, yes, the odd company will move from one network to another. I get that, but most won't. So really, if you're creating a layer one now, you are appealing to those in the future. Now, we are a very new industry, crypto, so don't feel like they're late to the game by any stretch of the imagination, but they might be late to my game in terms of, do I see myself in crypto in 15 years' time? Probably not. I'll have had a heart attack by then. The hair's falling out as it is. It's not a great lifestyle, particularly during the bull runs. So no, I don't see myself there. But yeah, I get you with that one. Why does the price of MSCR move so much with Bitcoin price? Is that because people will buy? I presume so, and also I suppose their reserve capital and the loans that they've taken out to buy the Bitcoin will heavily influence how people view the company. Maybe a website like Market Cap Off. I don't know what that was in relation to. think I checked CoinGecko too. Okay, that makes sense. I don't know if you were talking back about market cap. We need to defeat Dropbox. Wow. Oh, right. Okay. Yeah. Do most exchanges have BTC pairs to flip into, or might you need to go into a stable coin first? A lot of it can do. It's just they'll have BTC pairs. It's just how many they have. So the one that I've listed here is just all the Binance BTC pairs. See, some of them I need to get over there. I was going to say I do normally go through and just clear out the ones, but you can kind of see there's a lot. Binance obviously the biggest exchange. I just do them there. Maybe hopium that one day come back. Okay, I don't know what that was for, Bijan. Richard, is the growth on cows what you would consider healthy growth for the altcoin? I'm still let's put cows to bed in all forms of it. So you can't fault the movements that it's made over the past year, but let's also not kid ourselves and say that in the last year it's already gone up 200x, 210x. So we've already made a huge leap in the past 12 months. Now, there's people talking about 20 cents by the end of the year. 20 cents by the end of the year. 85,000% increase, which for my rubbish maths is an 850% increase in however long it takes, 18 months. That is a large one. It's not impossible, absolutely not impossible. But my worry still relies on this is getting shilled more and more. I'm seeing bigger and bigger names talk about it. Now that could be because it's a good thing, of course it can, but those kind of things still worry me, which is why I don't want to be 100% in it. I'm happy to put some in it and ride whatever wave up we can go. I saw Coin Bureau talking about it recently, and they were talking about how much of a significant cover it's had. But this is the weekly chart. Let's look at it. I mean, to be fair to it, it's had healthy pullbacks. It's kept on coming back to these EMAs, and it's bounced back up. It's been very regular in what it's doing. And we don't want to see something going up in a straight line. We want to see these pullbacks. These pullbacks are pulling back to sensible levels. So that's absolutely great. We've got tier one listing exchanges. Whether or not you like the level of volume, they are listed on tier ones now. That's what they said they were set out to do. This is a what they call it, a fair launch. So it's not like Bybit can just demand 1 million tokens. They've got to accumulate them themselves. And that, things like that could be suppressing or keeping up the price as they keep on buying it to sort of fulfill their stocks or whatever. I don't know. But yeah, it's just, sorry, I'm trying to get back to healthy growth. So this is all, this growth, what was the first figure? 250x it's done, is all on speculation. It's all on speculation at the moment. It doesn't have anything to deliver. It is, at the moment, in its basic form, a peer-to-peer electronic payment system, which is accepted in about 20 stores. So this is speculation, and that's fine. Speculative growth is what happens in this market all the time. We just need to see it deliver. And I'm one of these people that I'm not intelligent enough to go on and question the lead coder in a lot of these what they call them again? Spaces, Twitter spaces. But look, we get to 10 blocks per second. That's great. But is there a demand for 10 blocks per second? Having 10 blocks per second is great if you actually can fill 10 blocks per second. And where is the traffic that drives that? I've never bothered sat watching the blocks come in to see how often they happen. I think they're averaging at the moment of like one, there is one block per just over 1 second. So do we need that? It's still going to be an incredible milestone when they hit it, especially for a proof of work contract. And others will argue that, you don't necessarily need smart contracts for a project to succeed. And I get that. I completely agree with that. You can look at either the use case of ADA, which has survived years without a successful ecosystem. But if you are going to try and advertise yourselves as a layer one, then you are going to need smart contracts at some stage. So that definitely needs to happen. So I still feel that we are in the speculation phase, and the speculation phase may end. It may end drastically, and that's where we're at now. In terms of chart, whether you're looking on the weekly, there's definitely a potential double top here with a neckline around about 33. We drop that down onto the daily. I'll zoom in for everyone. Let's just get rid of these for now. Don't need these. On the daily, you know, are we actually looking at left shoulder, head, and this right shoulder's forming neckline there? If that's the case, then we go from 53 to, we probably go to about 38. Could take us to there. As I say, that's the other double top we see. But it could have just as eaten. Too many lines there. Probably the best straight freehand line I was going to draw. Yeah, it was. I knew it was. But we could just see it just pulling back here. You know, nice bit of consolidation, and then off it goes back up again. And you know, if that's the case, then you know, we'll regret not buying in at this stage. So it's one for me, which I'm just monitoring where it's going on the 4 hour. Still shows you that head and shoulders. I mean, you know, we're talking about patterns. Double top there, neckline, it played out. Had this come up, reversed itself, and then I was going to say that was a double top, but that does look like a right shoulder for me. That looks like a classic head and shoulders. And yeah, TA's TA. I've seen people say, oh yeah, in all normally I would follow the TA in this, but you know, this asset supersedes that. No, TA's TA. You either follow TA, you follow fundamentals. I don't think you can really marry the two. They certainly conflict with each other, and that shouldn't just totally overrule one because you've got a you know, a biased opinion on where it might go. So I'm just sort of sitting on my hands and waiting with that one. Like I say, I don't know where I'd like it to get down to 4. I think I'd probably buy a bit more there. But yeah. For me personally, the pump doesn't replicate its network effect and how much others are building on it. Yeah, I get that. I completely get that. And if this was 4 years old, that would worry me because it should have done something. It is still relatively new. And that's why I think the hype can help it go. And you know, despite how often you may come across it on YouTube or Twitter, I'm sure the vast majority of crypto don't know about it. I mean, the fact that it's scaling up the charts so quickly is definitely drawing eyes towards it. And you know what happens? People they're like butterflies or flies. They just have to go to the brightest thing there is. And this is starting to become bright. And that's what worries me, is it now getting too bright and it's going to need some correction? It's going to need some disinterest in it, and then it can regather its momentum. Rose Glimmer, for examples of more things being built on it. Yeah, we discussed that. Kaz has no spark to it. We discussed that. You have to understand that they're big mining companies. Yep, get that. Just my conspiracy, but always a risk with people with tokens that you end up falling for miner induced hype. True. Layer 1 is just competitive. Yep, we said that. Oh, Jamie's here. Morning. It's a good chance it could be forgotten. Yeah, everything is top 100 has potential. Well, everything in crypto has potential. Did you get verified on BitGet? Yes, I did. So I just did the passport initially. I can do proof of address next. I just did that first thing. Evening here. Jamie is in Australia. An issue is also marketing. The other major alts are driving up big deals. Real companies. Yeah, I mean, that's one thing, isn't it? This is community led. Anything they need to do, they need to fund it. Now, they do have funds. Like they got that $1 million or $2 million wallet or token wallet for Rust and all that. And I would have thought maybe they do. It's just not labeled that they, you know, you would have a marketing wallet of some sort, whether people contribute to it or not. I don't know. But yeah, they're going to need to come up with some mechanism. I mean, at least with proof of stake and, you know, governance backed tokens, you can at least let the community vote on things and you can put proposals forward. And I think they need something there to just help the community drive it. At the moment, it's just, you know, devs reach out, devs get an opportunity, then it goes to the community. If Kaz has no big team, how can they join the big deal? Well, yeah, I mean, they're obviously able to get listings. But yeah, I get what you're saying. Okay. It's 10 to 10 already. Is there anything any token anyone really wants to talk about? Actually, let's talk about dominance and total. because get this on one day initially. The dominance, bit of an interesting one with dominance actually. You know, we hit 52 back in end of June, July. But you could argue from a Bitcoin dominance point of view, we're in a downtrend. You could argue that because we have, you know, after hitting that high, we have now formed lower lows and lower highs. And this one's turning around. So, you know, all eyes are now going to be on 48.7. This breaks that. The downtrend continues. And, I really do think that actually for Bitcoin, the next level is probably going to be around about 47. And this is kind of the level we're talking about, you know, beginning of the year, really. Well, okay, March time. But that's where I feel the next major test is going to be. And it could take a while to get there, absolutely. But for me, I think there is definitely some sort of movement down there. And what we need to sort of, you know, I'll try and play the other argument, I suppose, is just if this does turn around here, if this does turn around here and starts going back up that way, then maybe we have an inverted head and shoulders. Maybe, and then that takes us back up to retest this. We form that double top. Then we get back into, you know, halvening and everything else, and the cycle continues. I don't know. But all I'm saying with dominance is we may have turned the tide now. And I think it's definitely worth people watching and just keeping an eye on it. Altcoins have bled for so long now. When we go back to my beloved DOT, put it on the weekly. I mean, this thing, it just can't catch a break. We've had what? 9, 10 red candle weekly candles in a row. You know, at some stage, even if it's short-lived, there's gonna have to be some buying relief for this. Now, that's not going to change anything for me because I'm all staked up, all locked up. I'm still looking at my next buys at around about, I think it's 368 to 383 or something like that. It's the next area. I'm kind of taking in these. When on the daily, they look a bit cleaner over there. Yeah, just generally, alts have obviously taken such a beating for such a long time. I'm not saying we're going to break market structure. I'm just saying that it feels like there's going to be a time where we're going to get some relief from that. Total market cap's done nothing. You know, it's the weekly. We've just been sat on this level. I mean, it looks like Bitcoin, obviously. We've been perched on this $1 trillion level for quite a while now. Whether or not you look at it and just say, well, the more we hit it, the weaker it's going to get. We're going to fall through. And maybe we do, and we start to retest like 900 billion. That's going to hurt alts and BTC. But with total 3, again, you know, there's just nothing new coming in. Now, it's not saved. I'm on the wrong settings. It's on Market Makers one. But, you know, these are the areas that I'm looking at, and they'll remain. This one is that one there, and we're sat in the middle of them at the moment. But that one where I drew it, I think it was a bit higher than that one. I don't think it was as high as this one here, although that one would make sense. But we're in kind of in no man's land. But a break and a close below 300 billion, and yeah, alts are going to get wrecked. But you know, we've been in the similar kind of range that we've been for about 4 or 5 weeks now. We just really can't seem to get out of this 320 billion on a total 3. So anyway, that's kind of where we sit with that one. Sorry, I'm just looking back. Okay, I don't know, I've hit something on YouTube. Something scared the life out of me then. It's like gone back to God knows how far ago in the past. Anyway, let's bring it all the way up to date. Right. Does anyone have anything else? So I didn't do a research token, and this is where we are with the research. So in theory, the next one on the list is Radiant, then Octospace, and then Moonwell. And then someone very kindly sent me about 50 of them, which I've deleted a few that I'm not particularly interested in. I've got to choose some from those. Why am I bringing this up? Is there any token in particular someone wants me to do next week? The reason I ask that is it actually is my plan to take a break from doing research tokens for about 6 weeks. I know you're going to say why. Well, the reason is we're here. We're actually here. assuming nothing happens to stop the date, next Tuesday is the start of Sam Bankman-Fried's first court case. So I won't have too much to report next Tuesday, but what I was thinking of doing is the weeks after that is every week dedicating 20-30 minutes to just summarize what's happened in the previous week. So I got a feeling that this is going to be an utter shit show. We're going to get loads of information that's going to come out. We've got, the dog's just come and said hello. We've got, they're going to have Caroline Ellison on there. They're going to have Sam on the stand. We're going to actually get to understand how they've tried to run this multi-billion-dollar company. Loads of stuff's going to come out. I think this could also, put a real dark shadow on crypto. Some of the stuff that may get out, may drive the price one way or another. Either way, I think it's going to certainly be interesting to just run through what we've done, what's happened in the week, because a lot of you are not going to be as glued to it as potentially I am. And so I'm going to remove the research token for a few weeks and just go over this. Now, if the judge decides that they need to delay court proceedings or whatever, I don't even know if they've selected a jury yet. But the trial is due to begin at 9:30 Eastern time on Tuesday the 3rd, which is next Tuesday. So from the 10th, I'll start doing catch-ups and summaries from that. Greg's put Render would be interesting in my opinion. I think it's a top AI processing related token. Okay, well, you got there first. So we'll do Render next week. So it is on the list down there, but I will add it. Insert row above, and we'll do Render. Oh, I'll tidy this up. And that will be on the 3rd of October, 23. So we'll do that. And then I'd say that likely that we're going to pick the rest of these up in November. If it's a nothing burger and there's nothing actually to report, maybe I drop it. But the idea is that I'd like to try and report on the SBF case. I missed it yesterday, but there was a Panama documentary on BBC about SBF. It must have been so interesting. My dad asked me if I knew anything about this guy. Yeah, so I'll try and watch that and see how accurate it was. But other than that, that's kind of all I've got to talk about, everyone. So, yeah, I don't know if anyone's got anything else they want to add or any comments that they've got, any thoughts on some of the things we discussed. If not, thanks again for your time. Another couple of hours wasted on a Tuesday night or Tuesday morning, a Wednesday morning even for Jamie, sat in the future. And yeah, the one thing I'd love for anyone that's watching it for the first time or whatever, any feedback you've got, anything you want to change. We've kind of had this recipe for probably about, 12 months now. And if people aren't liking it, then, let us know. And I'll be more than happy to try and just add things, take things out, whatever's not working. Very much about just feedback on this kind of stuff. Just want to make them better. If they're too long, because I waffle on, if you'd rather I broke it down to a couple of them, yeah, just let us know. Other than that, thanks again for everyone for tuning in. Hope you enjoy the rest of your evening or the rest of your day. And yeah, I shall speak to you all soon. Thanks again and cheers now.